What's happening, guys? Another Sunday scan coming at you. This time it's for the 26th of April. I feel like we're flying through the months here. My son is almost a year old next month, and that's really when the craziness started. That's why I've always called him the golden child. It's just from the day he was born, just everything changed in the market, and it just started going crazy. So, hopefully that keeps up. Hopefully the action continues. I don't really see a reason why it wouldn't. Even with downside, there's been just intense opportunity. We had some amazing bounce plays this week on FCEL and Plug, as well as many others. So hopefully things continue to go as they have. And even this recent market pullback, it lasted maybe 3 hours into the close one day, and then we're right back at it. So higher the better. There's always great opportunity, but the biggest thing is the momentum. And I think that OCGN is going to bring back a lot of momentum in the small cap space. The reason for that is, we haven't seen it was over $5 billion traded, in dollar value, and over or about 500 million shares traded on the day, which is pretty aggressive. And we haven't seen anything like that in that price range for, quite some time. So hopefully that starts to trickle. Hopefully a lot of people made a lot of money on that, and they start to kind of chase the other names that are in the 8 to 10 to 12 to 15 range, and we have a couple that get away. This one obviously surprised a lot of folks on the wrong side of the trade. It lasted a lot longer. On Thursday night, I put on scan. I was a little upset that I didn't really absorb the full story with the entire breakout in India, and exactly kind of where their story is. And if so, I probably would have been a lot more bullish, or at least joining the trend on Thursday. But with that said, I was thinking that they might trap it into the open on Friday and then squeeze it out. So one thing I always talk about is that never stop learning. And something for me is I always talk about reverse engineering, and kind of going back to see the why and the how. And so I was at a position kind of where I thought they had maybe filled up everything that they could have raised, but then you start to kind of do a little bit more research, and I talked to somebody that was in my room who is much smarter than me. I'm probably like 75, 80% on filings. I understand a lot, but I don't understand everything. And based on what they had filed the other day, or a month ago, I think, plus their current market cap, gave me a little bit more color as far as what they could raise. And all of a sudden, I went from having maybe this just squeezes out into the weekend, to, all right, I'm going to start to get aggressively short when this starts to fail to follow through. So there was two opportunities to do that into the close, and like I tweeted midday, I felt like it ended in a circuit down. And we kind of got that color where they were defending 1220s aggressively. And to me, they were probably trying to fill the book, trying to get that check mark, that okay, like, yep, all right, we raised $100 billion at 10, as you saw. And as soon as they got that nod, they just let it, come apart. And, that's interesting. That reminded me a lot of FTFT, if you guys remember, maybe a month ago or so. Very similar situation where they held a particular line, then it starts to fade off, and it started to come back. And on FTFT, I was pretty sized in short, and I ended up covering about 75% of my position, just because I was like, you know what, I've had no headaches. I don't, I'm gonna be just try to at least keep the headaches down. Don't get into any crazy short squeezes or anything like that. So I had sized down, and then maybe 3-4 minutes later, they did a midday offering, and it went down $2 per share. And I had absolute size. And it's a kind of a shoulda, coulda, woulda situation, even though I don't play that game. But it reminded me of exactly that, because if you looked at OCGN, you had that 1220 defense, came in, then they came all the way back to 12, and a couple minutes later, bam, they shot down the offering. So great, crazy opportunity. And let's just see how this continues. It's been a pretty crazy couple months here gearing up, different from what we're used to. And some of the questions that were sent in were questions, kind of related to that. So I'll hit those in a few. But for me, it's always about adapting. Nothing's ever going to be the same. And the more that you expect it to stay the same, the more that you want it to stay the same, the less prepared you're going to be. So always come in, just like I talk about, unbiased, have your plans, set price alerts, and really stay familiar with what particular setups are doing just that, setting up. FCEL and plug were perfect bounce plays. I was probably more long biased all last week on these reversals, on all the SPAC reversals. We've been talking about all the SPACs getting, completely demolished on the daily chart. I made a huge list of all these different trades, all these different names that were basically at 52-week lows that had faded 80% off the highs. That doesn't mean that I'm going to trade them all on Monday. But what it means is I'm going to set price alerts. I'm going to be familiar that when a PR hits or abnormal volume hits or an abnormal trend starts to hold that secondary move, I'm going to be more aggressive. I'm going to be more patient, and I'm going to let those trades work because I know that that's what's working right now. So that's what it's all about. That's what's, you have to adapt in this market. And, really it has not slowed down at all. Yeah, we don't have 100, 200%, gainers every single morning where we wake up at 4 a.m., 6 a.m., whatever. And, there's 180%, 220%, 80%, 100%. We don't have those in the last 2-3 weeks, but that's fine. I'm totally okay with that because, one, I've been able to not have to get up as early. Two, I've been able to get walks in, and ideally I start to maybe do a little bit more working out in the morning. But it at least gives me a little bit of time for myself back, because here's the reality. Once I put on that first trade, I'm there, right? And so this past week, I put on a couple trades, not even sized. I'm not sizing in this market, pre-market. It's just not worth it. There's just so much volume, so much opportunity, literally 9:45, 10 a.m. plus, that you don't really need to be aggressive pre-market. And, that's kind of how I've been treating it. But Thursday and Friday, I did place small trades pre-market, and a couple worked, couple did nothing. They were kind of, sideways for the most part, or a little bit up. And, it was just to kind of be present on the name. But you know what? I didn't take a walk that morning. I didn't get away from the desk that morning from 7 a.m. And that's my fault. I don't need to be trading early. I don't need to be doing that kind of stuff when we have so much opportunity. So that was one of the first points that I was going to make today is really take control of your own trading, right? A lot of times, and I'm guilty of this myself, but we let trading control us. But you have the ability to control the trade. And that comes from, not placing a trade pre-market unless it's an absolute A-plus setup. That comes from not trading after hours. How many times do you place a trade at 4:15 or 4:30 and you end up staying there until 8 p.m., right? That's not worth it. We work hard enough that, between the hours of 9 and 4, that we don't need to extend our day from 4 to 8 p.m. We don't need to extend it from 4 a.m. to the 9 a.m. and 9:30 a.m. If we don't need to. And, yes, there are times when it's beneficial to do that. There are times, GME, AMC type days where, you want to get there, you want to be prepared, but, you be careful, not letting yourself control the market and letting it control you. And on that same note, we talked about being comfortable, right? You should always be comfortable in a trade. I guarantee most of you were not comfortable trading OCGN last week. Thursday and Friday, you probably got in there and you're like, ugh, this really could go either way. Is that an edge? No. So why are you either A, in it, or B, trying to figure it out while being in it, right? You're letting the market kind of control you. And I think that the best way to, at least take advantage of this career is to make sure that you are or at least taking control of, the situation. And when you feel uncomfortable in the trade, it's controlling you. When you trade too early, it's controlling you. When you trade too late, it's controlling you. So think about that. before you place your next trade. Make sure you feel comfortable on those trades, and if you don't, avoid it. There's plenty. We've got a couple other topics, and then I'll get into the questions that were sent in. So first and foremost, trending market and always looking left and pre-exhaustion. So the biggest thing that is gonna help you each and every single day, if you can't see it visually looking right at the chart, just put a line in. Put a line in your chart and look left. Look at where it was consolidating before. You'll notice that in the mornings it starts to base at a key level, and then after open it starts to base at a key level or top, if you're looking for the short side. And then just draw a line there and then wait. And just because it breaks under a key level or over a key level does not mean it's confirmation. And that's exactly what happened with OCGN this week. It was a perfect example. If you guys go back and check out the chart, look at Thursday between 720 and 750, the price, not the time. And that was all day, midday. And as it starts to come into 720, everyone does not want to miss that short. Everybody's hammering it. And guess what? It goes to 718, reclaims 720 right away. Most people think, okay, guess what? It broke 720, it's over. No, that's not how it works in this market. You need to see it break under, come back, fail, break under, fail lower, and fade off. That is a confirmation. That is failed follow through. When it goes under, sometimes under VWAP, sometimes under the key level, and then completely reclaims right away, they're just trapping. And then as they keep that the top, they were keeping a top at 750 all day. So they made you feel super comfortable to short, cover, or short, size in at 720s, and then they squeeze you out at 750, 760, 780s. And if you started to fight it and you did not respect the abnormal volume, where did you end up? The wrong side of the trade. So just kind of keep that in mind. I'm telling you, the easiest way to make these trades easier is to look left and just draw those lines on your charts. Trading is not easy, but the easier you make it, the better you're going to be, the better the trades are going to be, and the better you're going to feel. And the last comment before I get into the questions that were sent in, where swings are back. I was just talking about how my IRA, I really wasn't focused on it just because nothing was really going on. Everything was like one day and then it starts to fade. And so the IRA was boom, and then starts to kind of slowly fade. And then I get excited, it rebounds one day, and then it's, takes 5 days, it goes right back to where it was. So there was no, I wasn't starting to compound the returns like I was before. And so for me, I was just, that can take a back seat. I'm just going to focus on solely trading because I don't want, something in this account to start to impact me while I'm, day trading. And so Wednesday, we had a pullback and things that I was swinging stayed relatively strong. Thursday, we had the tax headline and everything pulled back, but they came storming back. And Thursday and Friday, so between Wednesday, Thursday, and Friday, those were the 3 best days of the year since January in the IRA of just, some holdings that I had. And you guys know that which ones I've been holding. I've been talking about them for a while, but it was nice to see that really rip back. So anyway, let's get into the questions that were sent in. So the first question sent in was how to avoid pre-exhaustion before a major setup. The easiest way is to put those lines in. Look left and don't worry about missing it. Right? The higher these things go, you're looking at setups that are 50, 60, 80, 100% winners, 200% winners, movers, if you will. The pullback, you're not going to miss it. The only thing that you should be concerned with is shorting too soon, right? So a lot of people, and the same thing with the long side, right? Look at FCEL and plug, same deal. You don't need to find the bottom. The only edge on a rebound type trade is when you have gap down and a flush like we did, I think it was Wednesday, the day that I bought FCEL and plug right off the open, because they gapped down, they flushed out in a huge way. It was almost like a huge market sell. That to me was an edge. However, for a lot of people, that might not be. It's almost like trading a parabolic move, shorting it. And look, if you're wrong, if you're early, then you need to know when to cut it off. If I was wrong and it stayed heavy, I would need to know when to cut it off. I would need to be able to make that decision on my own. And a lot of people have difficulty with that. So be cautious if you are trading that type of trade. The point here, as far as pre-exhaustion, is the lower these things go, the more bounce potential they're going to have. And the higher they go, the more fade potential they're going to have. So the point is that you're not going to miss it. There is plenty of meat to the move. And your goal is just to get the meat of it, right? Not all of it, not the top, not the bottom, just the meat. And if that means waiting and missing out on $1 and you still get $2, $3 downside, great. At least you avoid being, $1, $2, $3 too early. So think about that. I think most of us, it's that, gotta be in mentality. I feel like I want to be in there. I should be in there. Everybody's talking about it. I want a piece of it. And that's the one, that's really what takes advantage of us. And I feel like some of the best traders that I know aren't even looking at that name on that day, because they know that their edge is not there. Sure, maybe they have a high probability that they probably would know what could potentially happen, but it's that outlier volume, the outlier day, and over time, one of them is going to get away, and they know it's not worth it. So same deal with swinging it short overnight. What's the point? Crazy things happen when there's 200, 300, 400, 500 million shares. And you got a taste of that after hours on OCGN. It went up another $2 after hours. There was a positive study or whatever that was that TradeHawk had posted, which was a fantastic alert. Plenty of time, and it went straight up. And if you were being patient with the short side, good luck. And you make decisions based off of, the volume and thinking how, liquid it is. And all of a sudden after hours, it's a totally different type of trade. And the volume's not there in order to cover the size that you might have. So could you comment on the change in market behavior? Nowadays, gap up over 100% have vanished. How do we adapt? And what patterns are working now in this market? So I think that one of the biggest things that has been working really, really well, we've been talking about it. So hopefully you guys were prepared for these SPAC bounces. We had XL, RMO, FUBO, CLOV, as well as FSR. FSR was the latest one. And we talked about it on a pre-market broadcast. I was like, at some point, one of these is going to catch. One of these is going to catch, and it's not going to just be the one and done. It's not going to just pull right back. It's actually going to hold, and we're going to get that second leg. And that same day, FSR actually had that second leg. So that was nice to see. We also had SKLZ. Kathy Wood has been in there buying, so she absorbed a lot of volume. One of the days she was about 6% of the volume, I think. So we're definitely getting a lot of trade opportunities off of the lows. And so, like I said, a lot of my trades have shifted to the long bias, bounce plays, and really not underestimating how far these things can rebound. There's a lot, anything that has 100, 200 million volume, I think has potential for sort of that full day move. And I want to be patient until it blows off. Either it blows off or it has failed follow through momentum. And both of those can be found out by either one, obviously it just blows off, it starts to speed up like crazy, or two, failed follow through. I would just draw lines looking left to figure out, at what point does it start to change trend. And if you did that on OCGN, you saw that every single time it came back within the penny, which is crazy. We were going over it in the Traders Lounge, and it literally went to the penny every single time. The times that it broke, it was like a penny or two under, and then it reclaimed right away. So, don't worry about the 200% movers. And, to be perfectly honest, I actually prefer the current market environment that we're in, because I'm able to size in much more aggressively and not have that fear factor of just one newsletter coming in and just moving the tape like crazy. All of a sudden it goes into a circuit halt, and you've flipped your day upside down. So I like it because it's less likely to be influenced by one or two parties, which you guys know can happen in this current market environment. So anyway, next one is, what are some good ways to determine which setups are working, or is it better to simply focus on your best setup? So as a trader, I think you should always be focusing on what you're best at. Not just because I'm succeeding in a particular setup right now, or just because your friend is doing well in a particular setup, but it really has to fit with your personality, because what it comes down to is how you react and how you make those decisions, when it counts. And, a lot of times, a week like this week on OCGN and a few others, especially some of these unwinds that we had this week, people just get so used to buying the dip and having it work. But you actually find out if you have proper risk management. So when you pick your best trades and your best setups, you know what you're risking, where to risk your money to, where to scale in, and it fits your personality. And I think that's most important. Sometimes when you start getting out of your comfort zone and you're trading something that somebody else is, because they are, you don't necessarily have that same maybe game plan or reaction time, or understanding what makes it a good trade, right? And at the end of the day, you should have that understanding. What is it that's making this a good trade? And if it makes sense and you understand it, by all means, that's the trade you should be taking. But always focus on what you're best at, and just know that there's going to be those times when you should really excel, right? And those are the days that I risk the most. If I'm wrong, it was worth the risk. And I know that over time, if I put heavy risk on those setups that I'm best at and super high probability, and when they really set up, just like we talked about last week with Riot, Mara, all those, sure, maybe 10 or 20% of the time I'm going to be wrong on it. But over the course of, say, the year or 2 years or whatever, what is that going to do to your P&L? If you're 70, 80% right, and these are your A+++ setups, then those are your career changers, your game changers, your year changers. And so that's really, you should always just focus on that, in my opinion. Do we really have opportunities every day, or do we just force trade sometimes just because we want profits every day? I think we have I think we have opportunities every single day. I mean, there's been just countless. I can't even still keep up. But like I started off by saying, I'm just happy that we don't have the 4 a.m. rippers anymore right now. Sometimes, you wake up, you think it's slow, and quite honestly, pre-market has been slow. I'll give that to the people that have been saying it's slow. But the people that have been saying that the market is slow, that's basically admitting that you have yet to adapt. You don't know how to adapt. You only know how to trade certain setups. And, the market is not slow. And there is countless opportunities every single day. And the biggest change that I've made is less pre-market trading, even less trading off open. Because sometimes I get on the wrong side of something right off the open, and then that takes, we talk about, the focus and getting off course. And, when you have your blinders on because you took a trade right off the open and you don't see this one and this one, those are the easy ones. You're focused on this one, which is making you uncomfortable. Just like probably OCGN for a lot of you. Where was all your time spent? Watching it, trying to figure it out. And what was the opportunities? Snap had a great trade. MVIS had a great trade. But you missed it because your eyes were only on one. So I would definitely say it is not slow. And there is, countless opportunities every single day to answer that question. And then the last question that was sent in, how are you approaching swing trade indicators in such a choppy market? Please and thank you. So last week I was like, hey, swings are like, I don't know. They're just kind of, every day I get excited and then they pull right back. Go up, pull right back. And it was pretty much just sideways. But right now, good charts are working still. Understanding the catalyst on some names is always important. If there's something that it might be working towards, or if it just had good earning. and it had a big gap up, consolidates. A lot of times you'll see a big gap up, consolidation, it pulls back, and then if it reclaims, then it starts that breakout. And actually we had that on, I think it was AFMD. It is on scan tonight, but I'll mention it when I go over it. But great example of that. And sometimes the most obvious trade is the hardest because everybody's already there. They already know that it's a good trade. So they kind of shake you out or test your conviction before it heads higher. So a lot of times we take this trade, we have heavy conviction, and it looks like it's about to go, and then all of a sudden we question everything. And that is the importance of not oversizing, because if you do oversize, you're going to be the guy or lady that's bailing into the lows. So I always give a lot of wiggle room on swings, and then as they break through, not just because they break out, but as they break through, consolidate, and head higher, the further they get away from my average, I like to scale into that trade. And the reason for that is because you can easily get too top heavy. And again, if it's the obvious breakout, the obvious trade, they know that, and they'll do their best to get you out. So that is that, and we'll get right into the Sunday scan for the week ahead. All right, guys, this is the second part of the scan, and this is where I go over my game plans for the week ahead and how I'm preparing. First and foremost, George Otell, you've got the Momo Traders book, and Sean K, you've got the t-shirt for this week. All you have to do to be kind of entered to win is basically leave a comment and a like. The comments, all we ask is you just put the timestamp of your key takeaway. What was it that was an aha moment for you? And what we do is we turn these into videos. And by you taking the time to do that, you alone could be helping hundreds of thousands of different traders because of the videos that we end up putting out there. And there's been a lot of great feedback, so we do appreciate you guys posting those in the comment section, because it allows a lot of traders to go back and check them out. So May 22nd, we've got our Traders for a Cause event. That's free. I'd love for you guys to participate. The description has the link, so go ahead and check that out. Make sure you sign up, and we'll be sending out more information as it gets a little bit closer. I should mention, but I am not a financial advisor. This is for educational and informational purposes only. These are my plans, my goals, my guides, and how I prepare for the week ahead. So, MVIS, I'm going to be watching for 3 different types of setups. Either one, a gap up parabolic, just like SKLZ. You guys can go back and review the chart that I posted on SKLZ. That would be a perfect one that I would react to right off the open. One of my favorite style setups. Secondly, a weak open, failed follow through momentum. Somewhere where it opens maybe 1750, kind of ramps up towards red to green, and it fails. And then I start to fade it versus the either red to green or recent level of resistance. Third way is going to be I'd be watching for a weak open, consolidate, maybe 1680s, 17s, because that's where it kind of found a base on Friday. If it starts to curl off that level, I'd be playing that for that red to green, 18 to 20, maybe even a 22 blow off type move. So that's called being perma-unbiased. That's called not making a call one way or the other, but being prepared for both. And in some instances, 2 ways for the short side, 1 way for the long side. OCGN is going to be a crazy one. It's going to be one of those that soaks all your attention. And so a lot of people probably learned that on Thursday and Friday. A lot of people were probably staring at this thing all day while everything else just kind of trickled down and or up, and they could have had a lot easier trades. That's what we talk about, having the blinders on, like the horses in New York City. They can't see right, they can't see left. They're just looking straight at OCGN, and not necessarily an edge there. So be cautious, be aware of that kind of stuff when these types of trades are going on. And I was pretty effective at communicating that in the room, especially if you were new. No one should have been touching it anyway. Also, if you were putting in the lines, looking left, it would always come back and test literally to the penny. Literally to the penny. If it broke, it reclaimed it right away. So that's a good way to keep you safe. 1220 we identified as that key level. In my opinion, they were just propping it up until they filled the book. in order to raise the 100 million with the offering. And as I tweeted midday, I expected it to end in a circuit halt down, and we got it. It happened. I was there. You know, it was a pretty aggressive trade. It was a difficult trade. There was nothing easy about that trade. The power, the squeeze, the buying pressure. I mean, it is intense, and it's going to probably be a pretty crazy week ahead as well. 1220 becomes the key level for me, and you know, if it gaps up way over that level, I think it could have an issue with that. But other than that, we've got basically this 11 level from after hours as well as through the day. You know, you pretty much had some support there. And the 11, I think 70s or so was the other key, you know, pretty much around this 1160, 1170 range. So, you know, we'll call it 1170s, but I think these are going to be the key levels. And whether or not they just squeeze people out after hours, we'll find out, right? Whether or not that positive study that had come out after hours is really, you know, does it really support this move? Or was this just an after hours kind of squeeze? We don't know yet. We'll find out. There might be some 4 a.m., 6 a.m. kind of shenanigans on this thing, and by all means, I welcome that. But my key levels are my key levels. I will wait for those. I don't want to get, you know, involved at 4 a.m., 5 a.m. with this thing. There's no reason to. There's plenty of stuff to trade right now, plenty of action. There's no reason to, you know, really let this market control you. So I'll be watching. Hopefully we get some gap up, some type of you know, squeezes again. And, you know, just also don't underestimate the ability to just maybe avoid this one and focus on stuff with better edge. SYPR was great. I actually lost on the way up the first time. I was short there, and you can actually see a nice consolidation pattern, ABCD type setup. You can see them coming in. They've got a nice support level at basically 350, 340s. And you've got this breakout over 380s. In between that, you see that it's one, you know, holding that 340, 350 line. Two, it came back up over VWAP, came back, tested, confirmed, ramped up, tested, confirmed, and then broke through. So as it broke through that 380 and then pushed, I hadn't sized in. I just was kind of there on the short side just because I wanted to start in and scale if I was right. So I was wrong, so I bailed. I let it do its thing. I didn't even try to get, you know, a top print or anything like that. I let it blow off, and then I put some on. And then as it failed again, I put some more on. Ended up being a fantastic trade. And once again, it kind of goes to show you that you don't need to be first in. You don't need to be in at the top. Just go for the meat of the move. Let others exhaust out for you. And, you know, I mentioned last week, but all-day faders on Twitter, this was another example that he gave. And, you know, sometimes people, you know, get all nervous because people are putting out such good information. They feel like their edge is going to go away. But, you know, like I told him and like I told another friend was freaking out one time because somebody had posted like some really good information. And he's like, that's what I do. That's my edge. Like, oh, now it's out there. And I was like, dude, relax. You know, you overestimate what people actually are willing to do. And you can put out good information, and 99% of people are going to ignore it, or more. You know, less than 1% are actually going to take something and do something with it. And, you know, out of that percentage, what part are going to actually become your competition, right? So I think that it's great that a lot of people post some just fantastic information, and it's up to you and your drive and your work ethic to, you know, determine how far you want to take this and how far you want to reverse engineer it. And are you here Saturday and Sunday reviewing the charts, going back to see what the VWAP Boulevard was that was posted to you on Friday, and then compare it to a couple other prior movers? Are you doing that or not? How bad do you want it? So those are the questions you've got to kind of ask yourself, and those are the things that I tell people that share good information. Relax, don't worry about it, because most people are not going to be putting in that kind of work. So anyway, higher the better. The key levels 470, 420s. You know, basically where it kind of based and where it kind of peaked. So I don't want to get too aggressive towards the top end. I don't want to get too aggressive towards the bottom end. But I would be looking for a failed follow through. Morning shove, 450s, 440s fails, 430 fails. And then I would assume that 420 wants to hold. Once it starts to confirm, I'd probably scale in more and be patient. Continuation side. A lot of people say I never long. That's not true. More than half my trades are long. And we've got a lot this week, as well as, swings are going nuts again. So, Playboy, PLBY. This one, sub 25 idea on Sunday scan a little while ago, and I've been adding and adding and adding and adding and adding. I felt super highly confident with the trade. My goal when I set it at 25s was 40 to 60. We were smack in the middle. We were right around 50 bucks, 49 and change or so. So I rounded up. But it's acted way better than I thought. I was thinking maybe a 3 to 5 week trade for me, and it immediately went up 20 bucks, which was great. And then it pulled back 10, and I questioned everything. I was like, oh. Did it again. I was up huge, and I didn't take it. And so anyway, I added, and I felt really, confident about this trade. And then the next day, it was up 10 bucks. So this is a great example of the market being the market, and may the most fit win, right? And they make you question everything. They test your conviction, and what happens is your size. It's a perfect trade, and then it pulls back, and you dump. Or you sell most of it, and then it goes up 10 bucks, and you're never going to buy the same amount. That's how they start to spread it, from the few shares in a few hands, or a lot of shares in a few hands, to a lot of hands with small size. And so anyway, hopefully this continues to go. The goals are still the same. 40 to 60 was the goal. Like I said, we're in the middle. Whether or not this ends up being the 60 to 80 to 100 ripper, who knows? They've got earnings mid-May, so we've got some time for this thing to build and really go crazy. So we'll see what happens. But hopefully you guys participated at some capacity. If you saw the trade set up, you're sitting on a double. So Rail. If I can get there. Rail. There we go. RAIL. This one finally came back. Another example, this one and APTO and Craig and all these names. These have all been scan plays and swing plays that I've had for quite some time, and they kind of start to go and then they fail. And so anyway, just like I said the other day, it's like every single day they go up, and then it takes a week to fade back down, and just my IRA wasn't going anywhere. And then all of a sudden, Wednesday, Thursday, Friday happened, and everything's good. So Rail, so far so good. We'll see what happens. Ideally, it starts to kind of form a new base at 7, and then I can start to scale in from there even more. APTO, you guys know I've been there for a while. I was in there in the 5s. It went up, sky high. I sold a bunch, so I had a good realized, position, and then I held the rest, and it ended up going actually red. And so, once again, it was like, damn, it's been 2-3 weeks of just straight down after it was a stellar trade. So I'm hopeful that this starts to kind of base and form a base at 550 and kind of mimic this AFMD. AFMD, very similar, and actually what I was expecting to happen. And AFMD is a good example of, just like Playboy and the rest of, it's a very high probability setup. You can see the wicks on the daily chart that we talk about, and then they do that pullback day, and they make you question everything, and then all of a sudden, bam, it's back to the highs, and then through them. And so now you're left with less size, and it's at the highs, and you're, do I add, do I not? But in this case, I held it all. I actually added, and so far so good. So that's been a great swing trade. Craig finally picking up. Craig had an 8K after hours. They closed the 1152.2 private placement that was announced a while ago. It's been a while, but basically 250 premium to the close. So it'll be interesting to see how this one plays out. It did pop up towards the 10s after hours, but maybe they're starting to cross their T's, dot their I's, so that they can start to put out PRs and things like that. If so, this is the type that's thin enough that it could go crazy. So I'd love to see that happen. But again, we'll see. I've been here a long time, as you guys know. and we'll see. AFMD, the last part of that is ideally, my goal is maybe 12 to 15 range if it continues. Huge transitional day on the daily chart with all that volume, and then started to position into the dips and being patient from there. So we'll see what happens with that. UXIN actually did the same exact thing as last time, where it had popped up this day right over here, and then after hours it ramped for about 20-30 minutes, and then it ended up pulling back. So I remembered that, so in this particular case, I actually sold some at 240s, as I showed on Twitter and wrote in the room. But fantastic trade from the high 150s, 160s. The goal was a swing trade / big picture. But when it starts to go parabolic, I'll go ahead and lock some in. So last couple, plug and FCEL, big bounces. Obviously, I have 10% of what I had on those bounce days. That's how it always works, right? Had it not worked, I would have had too many. Given that it worked, obviously I don't have enough. But fantastic trades, and I held those over the weekend as well. So we'll see, if they have some follow through. But I've been pretty patient with those, given the setup. Hopefully they extend a little bit to the upside, and then give that opportunity for a little bit of a pullback trade. BTN, you guys know I've been there. And once again, these wicks. Anybody that's been watching these videos for even a quick minute, I mention it every single week. So these wicks should look familiar. This is what I like to see on the daily chart. Means that there's a buyer in the tape. And last couple, one was Galt. Galt, another great setup. Once again, you should see the wick there. And it started to soak up versus VWAP. This was an idea this week on the scan. And my goal was to buy dips if 260s started to base. And we got a great breakout. So what triggered my interest was this gap up day with huge volume, and then it came right back up and over. And I felt like that was odd. It might have caught some shorts off guard. And then when this pulled back and they bought it back up, that was the confirmation that I needed to see, as I pretty much noted in the room. And so far so good. So letting it work, but whether or not it, I was thinking maybe 455 blow off and then leave the trade. BGI has been, you guys know I've been there since 2. I ran it up to, I rode it all the way up to 5, and then, all the way back down, unfortunately. But it was actually up to 330s after hours. It was promoted on Twitter. So I actually used that opportunity to lock some in at 330s and above, 330, 332, 334, and a little bit higher. It was a great liquidity event. For me, I've been sized for quite some time, and it seems like every time it starts to go, there's somebody there. So I potentially will reposition. I still do have a position on it, but I just felt like, given the fact that it was promoted and pretty much pushed on Twitter, I felt like it was a good opportunity to loosen up a little bit on some. So I will definitely be participating if dips start to firm up. Last two, BTX, actually last one. BTX was, this I'll probably give another day or two. Fantastic trade, another one of those where it's got the transitional day, big volume day, pulls back, goes under VWAP, reclaims, and just pretty much has a dip buyer every day from that point forward. And every dip is bought, comes back, and shorts just didn't have a chance to get out. So it's been nice. I got there early in the week, added on Wednesday and Thursday, and I actually didn't take it off on Friday. It was over 18, and I don't have a lot of size, but I'm up $5, $6, $7 a share, so I'm letting it kind of do its thing. And if it starts to get heavy at Friday's VWAP, then I'll just move on the trade. So anyway, that is it for this week. I hope you guys enjoyed the video scan, and as usual, leave your key takeaway. Just like I said, you guys may not think it's a big deal, but by doing that, you might be literally helping thousands of other traders, because we're pulling those out. We're doing mini videos, and we're getting a lot of great feedback. So I appreciate you guys taking the time to do that. Leave a like I said, and have a great rest of the weekend. We'll see you in the room tomorrow.